What's up, guys? Todd here. So listen, this indicator just broke to a new 52-week high, and I think it's going to have pretty important implications to where the market's going. So it's the one that's directly above me. Let's dive in. All right, guys, so as I said, this indicator right here, what we're looking at, guys, is the new 52-week highs in the NYSE subtracted from the new 52-week lows. This green bar made a new high here. We haven't seen this level since March 23rd, 2015. Pretty interesting. I was just going over that in the members video, and I really wanted to share it here with you guys on YouTube. So overlaid is the S&P here in purple. And again, the last time we saw that reading, which was right here, the S&P was up around 2,100. Okay, so we have still some distance to go. We're 2063 right now. So I still think we go up to 2,100, and then we have upside fib objectives around 22 and change. So that's important. Today's kind of be a little bit rambling, if that's okay. That's just kind of how the market is right now. One interesting thing that I noticed today is if you look at the sector makeup today, let's bring that over right here. Check this out. What was the strongest sector? Right here, XLP. The staples were the strongest today, okay? And if we just kind of take a look at the chart, I mean, XLP is just ripping on the upside. So that's not a great thing when staples are kind of leading the way. They just edged out XLY, which is consumer discretionary. That's cool. XLK, technology, financials, materials, that's all fine. And then industrials, healthcare, real estate, utilities underperform, so no big deal. Staples looks like there's some bid left to it. So let's take a look at some of the stocks in there. But before we do, pretty good little upside fib objective here. If you take a look at the 100% measured move from major swing low to high, blue dot to blue dot, 618 was broken. 100% is going to be next in XLP, 5485. All right, so that's going to be important. Some of the stocks inside of XLP, consumer staples. So strongest today was CVS. Pepsi is definitely strong on that chart. Let's see what else is good. Altria looking pretty good on the top side. The other one that I liked is Coke. Coke is ripping on the upside, so that's good. The other ones I want to look at is, let's get out to consumer discretionary. So there's some good ones in there. Amazon, I like this guy. All right, so Amazon, let's do an extension off the lows here. So we're going to go blue dot, major swing to major swing, back down. 618 is going to be at 609. That's going to be key, and then 100% is going to be at 651. Let's do a retracement from the decline and kind of match that zone up and see if there's clustering. Retracement low to high, perfect. Drop you right there. 38.50. Okay, so oh, look at that. That's awesome. 609 to 611, that's going to be a key zone and Amazon. And then if that's broken immediately, we're going to look up to this pair at 649. So Amazon looks decent. Starbucks, I think, has the ability to wake up. It's been quiet for a period of time, so Starbucks can kind of break out. Looks like sort of this basing pattern there. Disney, not bad. Home Depot has been on fire recently. That one looks strong. Lowe's, not surprise related there. So there's some good stocks in there in this market. So I'm starting to be a little optimistic here. The big reason and a new position that we put on today was in UUP. So we did this in the public webinar this morning. We actually shorted the dollar, and I just want to show you that position. So if we go down to the dollar, pull him apart, okay, this has been a long consolidation in the US dollar. The Fed came back, guys, and was like, just kidding, we're not really raising rates this year. We just wanted to make everyone think that we're going to raise rates. Psych, not really. And now the dollar's selling off because if the Fed's not going to raise rates, you know, there's not as much incentive to hold money in the US because you're not going to get really that high of an interest rate or that high of a return. So it looks like dollars is heading lower. So let's just do an extension low to high, back up. We've just broken through the 618 right here. Let me get it out from on top of me here. So 618 projection of the prior swing was broken. Looks like 100% is going to be down at 91.94. Let's do a retracement down here. The 1272 is going to be right on top of it. Oh, actually, it's all the way down here at $90. So 2 key zones that I'm seeing in the dollar, and I'll show you the position we put on here today. That's going to be one target zone, and then this is going to be the next target zone. Let's do a little bit of time action here. I told you guys, this is just complete ramblings of a madman. I hope you don't mind, but that's just kind of how the market is right now. Okay, so I'm just looking at key fib dates. 618 was actually the low right there. 786 I'm going to get rid of. 100% is going to be out in May 13th, so that's cool. Kind of close to my mom's birthday. How about that? So the position that we actually put on in the UUP, which is the ETF that tracks the dollar futures, we're trying to get down to this 23 mark. So we did a 25-23 put spread in UUP. So we did this in SEP. I did the 25-23 put spread in September. I paid average price. So I paid like 74 cents for it. Okay. $2 wide spread, paid 75 cents. We can make $1.25 in the downside. So I think the takeaway here, guys, is the dollar lower with interest rate hikes on hold helps propel commodities, which helps push this overall market higher. That could be the reason that you're seeing consumer staples strong, because they pay dividends in an environment where the Fed isn't going to increase interest rates. You got to go to stocks that are paying dividends. It's like if the Fed is forcing everyone into the stock market, saying you're not going to get return on your fixed income investments like ever, and might as well go to the stock market. People are like, all right, fine, screw you. We'll go into staples and get the dividend, which, okay, that's fine. So that could be a reason that we're seeing that. So anyways, guys, so ramblings. I do want to say this. We talked about likes. I asked you about the likes and stuff on the video. And if you do enjoy it, to hit the comment or hit the like button. You guys blew me away on this last video. Like, so amazing. There's 932 views, which is not bad. 148 likes. Like, that's amazing. That's almost 20% likes. So that is so much appreciated. I really, really do appreciate that. I'm trying to make a new home here on YouTube. You guys know from way back, I launched my business on Twitter back in like 2006, 7, and 8. I kind of feel like Twitter's dead now, and I think YouTube's the future. Plus, I just have so much fun on YouTube. So, there's some fun stuff. That's my drone video I put up. If you guys want to see that, I'll link you to it right here. I have a new drone. I actually tried to fly it for you in the office, and I was going to like float it in front of the screen here, but I crashed it twice into the wall. So I'm like, yeah, let's not do that. So anyways, guys, appreciate it very much. That's the positions we're in. Tomorrow's the last day of the quarter. We'll see if this ramp job in stocks continues or if there's a pullback, but I think that's the path. See you guys. You're still here? I guess you liked the video. If you did, go ahead and click the thumbs up button or subscribe to this channel directly below, and you'll get the videos in real time. Or you're gonna have 7 years of bad luck trading and you have to babysit Jake and Brody.